Welcome to the second tax law module. My name is Rob Bader, Director of Tax Operations, and I'll take you through filing status. Thank you for volunteering, and I look forward to seeing you at the tax sites. The purpose of this module is to learn how to determine what the main taxpayer's filing status is. This is extremely important as it determines the taxpayer's standard deduction, tax rate, and eligibility for certain credits. There are 5 different filing statuses. They are married filing jointly, qualifying surviving spouse, head of household, single, and married filing separately. The filing statuses that are listed here in order from the most beneficial to the least. Again, your client's filing status is responsible for their tax rate, the amount of their standard deduction, and eligibility for certain credits. Taxpayers can only use a filing status that they are eligible for. Let's talk about each status. Single is the easiest to determine and one of the most common filing statuses. Single is used for taxpayers who were never married or are not legally married. If the client was divorced on or before December 31st of the tax year, their filing status is single. Please note that the state of Maryland does not acknowledge separation as a legal status, nor is there a legal separation filing status. If your client tells you that they have been separated from their spouse, they are still considered married by the IRS in the state of Maryland. The only filing statuses that available are married filing separately or head of household if they have a qualified dependent. Since the state of Maryland does not recognize legal separations, the taxpayer cannot use single as a filing status until they are legally divorced. You could also be considered single if your spouse died before January 1st of the tax year. Next, married filing jointly. This status is for legally married couples. If a taxpayer's spouse died during the year, they will still file as married filing jointly. The main taxpayer's marital status is determined based on if they were married or not on the last day of the tax year you're filing. In other words, if a couple was married on December 31st, they're considered married for that entire year. Couples can file jointly even if one of them has no income. Our next status is qualifying surviving spouse. This is a rarely used filing status. While we may see widows or widowers at the tax sites, specific requirements must be met to use this filing status. Taxpayers using qualifying surviving spouse are only eligible for 2 years after the spouse dies, and they must have a dependent child or stepchild that they are claiming the year the spouse passes away. Please note that grandchildren and foster children are not qualifying children in this situation. The year that the spouse passes away, the taxpayer should file as married filing jointly with the deceased spouse. After that, they may use the qualifying surviving spouse status for the next 2 years if they have a dependent child that lived with them all year and the surviving spouse paid more than half the cost of maintaining a home for the dependent. Next is head of household. Because of all the tests involved, head of household is one of the most misunderstood filing statuses. Rules can be complex based on the family situation, and it is the filing status most often claimed in error. Incorrectly using this filing status could cause a taxpayer to owe additional taxes along with the penalties and interest. Head of household is for people who are unmarried or considered unmarried, who have paid more than half the cost of keeping up a home and had a qualifying person living in their home for more than half the year. You will have many clients that tell you that they are head of their own household, or they'll say, I live in my own home and I pay all expenses. That's not what this means. You must have a qualifying person living in the house with you. The exception to this rule is that if the person who doesn't live with you is your parent, that you can claim as your dependent. Further, the qualifying person being used to claim head of household must be related to you. So what does being considered unmarried mean? To be considered unmarried, a taxpayer must be legally married but living apart from the spouse for at least the last 6 months of the year and file a return separately from the spouse. They must also pay for more than half the cost of keeping up a home for themselves and their dependent child. If a taxpayer is considered unmarried and filing head of household, their qualifying person must be their child and not another relative like a niece, nephew, or grandchild. If they are actually not married, more relatives will qualify. The last filing status is married filing separately. This filing status is for a taxpayer who is legally married and cannot agree to file a joint return with their spouse or chooses to file a separate return. This also applies to couples that are married and haven't seen each other in a long time. We have a lot of clients that will come in and say that they are single, but if they are still legally married and not yet divorced, they must file married filing separate unless their spouse agrees to file jointly. Note that if a client does have to file this way, they're going to need their spouse's Social Security number to file electronically. If they don't know their spouse's Social Security number, they're going to have to file a paper return. Married filing separate is often the worst filing status because it has the highest tax rates. There are many credits filers are ineligible to receive, including the earned income credit and the premium tax credit, and they may be forced to itemize deductions if the other spouse itemizes. Now, let's run through some real-world situations to practice assigning a taxpayer's filing status. Remember, always use the flowcharts in your Pub 4012, which you will have a copy of and are also available for you to use at the tax site. Follow along in Tab B of your Pub 4012 as we use the charts to help you determine the correct filing status to use. Remember Megan from Module 1? She lived with her daughter Francesca all year, and we determined that Francesca is Megan's qualifying child. Megan has never been married and pays all the expenses for herself and her daughter. Let's go through the steps again. Megan wasn't married and she did not have a spouse who died. She paid more than half the cost of keeping up her home, but does her daughter Francesca qualify her as head of household? Let's find out. Francesca is Megan's daughter, and as an 8-year-old, she is also single. So she is a qualifying person for head of household, regardless of whether Megan can claim her as a dependent. With a qualifying person in Francesca, Megan can claim the head of household filing status, so long as she paid more than half the cost of keeping up her home and Francesca lived with her for more than 6 months during the year. So why is head of household a better filing status for Megan than being just single? Well, the standard deduction is higher and the tax rate is lower. To review, there are 5 filing statuses. Your filing status determines your standard deduction, tax rate, and eligibility for certain credits. You typically want to avoid married filing separately if you can, and you need a qualifying person to file head of household. You do not need to memorize this information in detail. Use your flowcharts in your 4012 to help you determine filing status. Remember, you are learning IRS terminology and rules. It can be confusing if you're not familiar with it, but working with these concepts will quickly become easier as you gain more knowledge and experience. That's it for the filing status module. The next tax law subject in this series we will cover is income and the different types of income that must be reported on the tax return. Be sure to watch each module initially in order, then return to individual modules to refresh your skills.